Hello everybody, I am Attila Tanner. I hope you're all doing well. Welcome to a brand new video of Next Stock. 2 weeks has passed since last video and many companies are doing their reporting. It's a busy period for quarterly results. If you're new to the channel, Next Stock, I would like to explain how things works. So I have first a highlight section where we talk about some companies that reported lately that is of interest. Then I'm going over the value stocks. These are the companies that has high market cap with low price to earnings. And why is that? Because those companies are more safer companies and should become your cornerstone of your portfolio. These companies has good earnings and they are kind of stable. And the other companies that we're going to look at is dividend stocks. This is companies who pays out the dividend. Real cash into your portfolio, and those companies are also listed here. They are more straightforward. We just look at the dividends they pay out, compare it to the stock price over a year. Then another category we have is the growth stocks. This one is a little bit more interesting. This is of course riskier, and then they can give huge losses as well as huge rewards. So you have to see your own risk tolerance, how much growth stocks you should have in your portfolio. The way we calculate it is that we're looking at the sales growth year over year for the companies, comparing it with the stock price growth year over year, and all this information is then entered into my computer program, and that creates a huge list. So this list is purely numerical basically, so there is no consideration into the world events, geopolitical issues happening, or pandemic. So you have to make your own judgment call based upon this information and see if this makes sense for you. But this is more from a result purely from the numbers. So in the top of this growth list, we will see companies then who has good growth, and also while the stock price hasn't followed it quite that much. So they're gonna be listed in my growth top list. The bottom of that list, the same list, the bottom of that list will be I consider them pricey, because the sales growth will be not much, and the stock price on the other hand would have been grown considerably. So you could consider the pricey ones also a warning, maybe be careful. Or maybe I could even say sell, but I don't want to use those words as buy and sell. It's more a judgment call that you might want to do yourself. So I rather call them pricey instead. We do it for the US market, and the same thing then for the Canadian market. All right, so let's get going. We start with the highlights, and the first company to look at is Apple. Their year over year growth was 11%. And my target rate for them is $136, which is 21% lower compared to where they are trading at the moment. Microsoft reported as well. Their year over year growth was 20%. My target rate for them is $283, which is 7% lower compared to latest trading. Google reported the year over year growth was good, 32%. And my target rate for them is $2,739, which is about where they are trading at the moment, 4% lower than current tradings. Google also reported that they will do a 20-to-1 split, meaning if it's 2,700, you're going to have to divide it by 20. So it's going to land around $100, the stock at some point, but you get 20 times more shares. All right, Amazon also reported the year over year growth was 16%. $3,582 is my target rate, with 13% upside from current levels. Okay, other companies that reported was Meta. As you've seen, the stock price lately went down after following their report. The year over year growth otherwise for Meta was 20%, which is not bad, but the market was expecting more. My target for them is $353, and there is an upside of 49%. Tesla reported as well. They had a great year-over-year sales growth of 65%. My target rate for them is $1,110, which is a 19% upside. PayPal reported their year-over-year growth is 13%. The stock market punished them by stock prices going down for PayPal. However, my target remains to $274 for them, which is an upside of $117. Unity reported their year-over-year sales growth was 43%. My target for them is $143, which is an upside of 30%. All right, so this is the highlights for this time. We're gonna go into the US market and the value stock. So this is the high market cap companies with low price to earning, the stable ones, so to say. Number 1 is JP Morgan, number 2 is Bank of America, and number 3 is a newcomer, Exxon. They entered the list after the report. They had a great year-over-year sales growth of 80%, so they entered the list. Pfizer drops out from this list. The dividends in the US, AT&T moves up 1 spot to spot number 1, and Petro China moves down to spot number 2, and the number 3 is China Petroleum. AT&T also mentioned that their dividend will be a little bit lower in the future, but the numbers for now is the numbers I have. So we shall see what happens in the future. All right, let's go to the growth stocks in the US market. No changes at the moment. Moderna is number 1, Vroom is number 2, and C3AI is number 3. They will report soon, and we shall see if they still remains in the list. So now the pricey ones in the US market. Nokia is number 1. They did report. They are up 2 spots to number 1. Their year-over-year sales declined 10%. Stock price was up 59%. HSBC is a newcomer, spot number 2. Their year-over-year growth was modest 1%, while the stock price went up 34%. Ford declined 2 spots to spot number 3. General Motors, who was in the list before, drops out from this list following their report. Okay, this completes the US market. Let's go to the Canadian market. We start with the value stocks there. And number 1 is Royalbank, number 2 TD Bank, and number 3 is Bank of Nova Scotia. So no changes. The dividends in the Canadian market has a little bit of a change. Pembina Pipeline moves up to spot number 1, and Enbridge drops down to spot number 2. TC Energy remains on spot number 3. The growth stocks in the Canadian market, we have an update. Lightspeed remains the spot number 1 despite their report. Their year-over-year sales growth was impressive, 164%, while the stock price during the same time period has declined 43%. So they are our top pick. Air Canada is number 2. Curaleaf is number 3 as before. All right, let's look at the pricey ones in the Canadian market. We have a few updates here as well. Show Communication reported, and they are remaining on spot number 1. Their year-over-year sales growth was modest 1%, while the stock price during the same time period has gone up 69%. Loblaw re-enters the list as spot number 2. Year-over-year sales growth 2%, while stock price went up 25%. TD Bank remains spot number 3. Cameco Corporation, who was in the list before, drops out from this list. All right, that's it for this time around. Thank you so much for watching. If you like those videos, please like and subscribe so you don't miss out also on the next video when it's out here in 2 weeks' time. And hopefully we can discuss other highlights and changes to those lists. Before making investment decision, always gather as much information as you can. And thank you so much for watching. Until next time, bye-bye.